Good evening, traders. John Kelly for Options University on Wednesday, October 26, 2011. The disclaimer, trading always has been, always will be risky. Just ask anyone in the last 3 days, or even today. The market's been all over the place. And the reason is Europe, of course. Now, we started off the week in pretty good shape. In that Sunday night, Monday morning, China announced their PMI results, which was over 50, which is expansionary. And it rallied the market on Monday. And the China Premier also announced that they are done tightening. They're going to let the China economy expand on its own pace at its own rate. Then on Tuesday, the agreement we expected over the weekend had not materialized, and there were announcements that there would not be a European agreement on the debt crisis. The market sold off hard on that announcement. But today, on the likelihood, announcements were that the likelihood was they would come to agreement. We opened up and went right up 150 points. Then as news trickled down that there was this problem and that problem and this problem and that problem, we dropped from 150 plus to negative in the Dow and negative in the NASDAQ. And then on the likelihood that there would be a deal this afternoon or a plan for a solution to the crisis, we closed at 152 plus. And the rumor is that China is coming in as the white knight to buy the Eurobond. So if we look here at the E-mini S&P 500 over the last 3 trading days, of course, Monday was the up day with the China PMI and some interesting other results. And then on the announcement that there would be no European solution offering this week, we sold off only today to move between these numbers. Now, the volume had been light until news of no deal, and it looked like the world was coming to an end and we were going to go find the bottom of the range that we've been in, which is down here at 1068, rather than trying to break out of the top of this range. And volume came back in today on the likelihood that there will be a solution. And if I have to offer anything, because as of this recording at 5:42 this evening, Wednesday evening, there's no official announcement, but the feeling is they're going to do it. The details may be like sausage in Congress in session, something you don't want to look at. It's going to be ugly. It's going to involve them getting very creative at trying to kick this can down the road. And they've kicked the can down the road so many times. It's got so many dents in it. It's got so much baggage attached to it that it really is a Band-Aid over a problem they are not solving. They are not going to stop the Greeks from doing what they're doing. They're going to reward them for being irresponsible, the Italians and the Spaniards. They'll continue to finance irresponsibility, which will only encourage more irresponsibility. But if the market likes it, we want to be on the right side of the trade, and we're going to look at some of those right sides of the trades in the gold member section. But the VIX had been at the top of this range around 48 with lots of wonderful premium to sell credit spreads with, and now we have been trying to break the bottom of this channel we've been in for 3 months at around 30 and change. We closed below it 2 Fridays ago and then went right back up above it. And on Monday we got down to 29 and change, right back up to around 32, 33 yesterday, only to close at 29.91 this evening. 29.2 is standard pressure that we'd always set the jet airplanes to when we went above 18,000 feet, and then reset it to whatever local altimeter setting was when we descended below 18,000 to approach the airport. So a number I am very familiar with. Economic news. There hasn't been much this week. It's been light. The Case-Shiller Housing Index came in up 0.2%. Which was a very good surprise. The market liked that. Then, boy, Tuesday, the consumer confidences were getting that negative news out of Europe that confidence was down, the worst since March of 2009, 2.5 years. That helped to tank the market. And this morning, as the market was coming down off its opening high, durable goods was helping to pull it down as it was down 8%. Stock news. Merger and acquisition is the general bellwether on Monday, in that Cigna Health announced they were acquiring HealthSpring for $3.8 billion. Oracle was buying RightNow, which had earnings coming up. I was hoping to make some money off that earnings announcement, but that's a done deal now, $1.5 billion. Mattel is acquiring Thomas the Tank. If any of you got little ones or have had little ones aboard, Thomas the Tank was a very big item that was in my house for 3 different children. And Smucker's buying Sara Lee for $400 million. Nike has hit an all-time high, and Dollar Tree in that sector with Dollar General, Dollar Tree, Family Dollar recording all-time highs. The big thing to go with China is earnings, and there have been some shocks this week. Earnings news was driving the market up. 70% of the stocks have been beating and offering good guidance, and the market's been going up enthusiastically because of that. But after the close on Monday, Netflix came in, and they beat on the earnings, but their guidance was they expect a loss next quarter. They're expanding to Europe, and their problem with the streaming news and with subscribers walking away with the price increase is hurting them. The stock went from $118 a share down to $74 a share and is finding some traction. The investor who came out, the analyst who came out 3 or 4 months ago and said that Netflix wasn't worth $100 a share, Fani was proven right, and today announced that he has closed his shorts on Netflix because he's collected that money, and now he is long Netflix. Go figure. Yesterday evening, Amazon came out with earnings and was a disappointment. The stock surrendered up to $50 worth of value at one point, closed today below $200 a share. Kindle sales, which are below the cost of their Kindle, is costing the company. However, there is a silver lining to this cloud, possibly. Remember what Apple did with the iPod. They sold skedaddles of them at a very low cost to flood the market, and everybody was using them. And people that I talk to, investors I talk to, are buying Kindles for themselves and for their family for Christmas. They're cheap enough that they consider them throwaways. They don't want to buy a more expensive iPad and lose it and then have to replace it. So this Kindle strategy may work the same as the Apple iPod. Stay tuned and keep an eye on Amazon. First Solar missed badly on earnings. Their CEO resigned immediately, and the founder has taken over from the company. Where it goes from here, I want to keep an eye on. We'll look at it in the gold member section along with Netflix and Amazon. Cummings International in the same group with Joyg, J-O-I-G, and Caterpillar. Caterpillar had beat on earnings earlier. They beat on earnings, but their guidance for the next quarter and for next year was soft. It was down, and that hurt the stock and hurt the sector. So which way do we go with this? We have Apple and Amazon, Green Mountain Coffee Roaster, Netflix, Panera Bread, and Boeing, just a few to take a look at, which we'll look at in the gold member section next.